we are going to work on helping this company raise $1 million. This is part two of our series, $1 million. And we're probably looking at a seed round, although you could argue pre-seed. We can keep that discussion going. And this is a CPG B2B. It licenses technology to businesses that are selling directly to consumers. I have here with me Mr. Ryan Rattan, one of the co-founders here at Startups.com, multi-time founder, chief marketing officer. Ryan, we're going to talk about go-to-market strategies because
Love it.
investors need to see traction. The more traction you have, the easier it is to raise investment. That's what we got going on.
Love it. Let's dig in.
Super excited to get this going. And what we did is we went through the pitch deck already with Will, but we're going to review it one more time just for the understanding. Just so everybody knows what we're doing here, we are working on this campaign using our new investor matching tool here at Startups.com. Highly recommend you go check it out. You can upload your pitch deck and start to see all the ideal matches with investors, get things going for you. Ryan, what is exciting for you about this tool and what we're
Oh
doing
man,
these days?
it is my favorite new magic trick. It's my favorite new magic trick. I have forced founders to do this on screen share with me. Like, okay, now fire it up. Now I want you to do this. Pop this in here. Okay, now hit go. It's a magic trick. I love watching founder reactions too. And wait, that's all I had to do. I just had to upload my deck and click next. And now I've got a bunch of investor matches. And Benny's going to start generating messaging for me. And then if I connect my inbox, it can send them for me. Like, yep. And they're like, what's the catch? I'm like, there's not a catch. Like, catch some cash from investors. I don't know.
Yes, absolutely. And really, what do you have to lose since you can try it for free?
Yeah.
And what's great is I've loaded up here Socana Genesis. And last session, we just took a quick look at the investors and give you an idea, Ryan, of the investors that we were able to surface. So one of the first matches we're looking at was Ag Funder, specifically in ag tech, food and beverage, and they're
Perfect.
handling all this 100% match. And then we keep going down, and you've got some serious investment firms here. These are some
Yeah.
funds that can really make some noise. So again, traction is going to be extremely helpful. So Ryan, I'd love to get your quick response in terms of what's going on with this pitch deck. And let's just gloss this over and then talk about what are some things that not only this founder can do, but other founders in terms of traction for this type of startup. Let's take a look. So we've got the problem. 15,300 U.S. cannabis producers still rely on traditional hang drying, resulting in $8 billion in avoidable annual costs and a product with no differentiation from the competition. Talks about how the problem is inefficiency, space intensive, high risk, low shelf life, homogeneous. You've got all that going on. Your thoughts?
I think this slide actually does a pretty nice job. I'm scanning now, looking through. Nothing massive I would necessarily change here. I'm having a little trouble with the font size. That's just an age thing on
Yes.
the on the piece to the right over there. But the look, I think it does a good job telling the story. Right there, the thing I think we could do here maybe a little bit better, consolidate a little bit of this. There's three different sections of text here.
Yeah,
So it kind of
exactly.
forces the eyes to jump around a little bit. I'm not sure we need all of this. The outdated post harvest process, do we need that piece as much? Feel like it's well covered by the kind of the main line there, and then what we've got down the left with the icons works really well for me.
Right. And that's a common theme here, Ryan, you're going to see. A lot of extra charts.
Yeah.
And, we talk about this all the time. Founders feel this sort of insecurity and they want to keep backing up their bold claims with
Yeah.
more information. But really, the genius is in how brief you can be.
Say less. To this day, still, and it's a pretty commonly cited case study for me is Twilio, right? We've boiled the entire complex world of telephony down into 6 API calls.
Right.
Right. Wow. Right. Super powerful. Right. That's enough. Like we want to catch people's attention with that. Right. So now that's not the problem statement. Of course, that was the solution. But you could easily add a little bit of problem to that and kind of get both in one shot. The brevity sells here. I think to your point, founders often find themselves in this position where they're like, well, maybe this is what the one here. Maybe this is what the one here. Maybe this is what the one here. So let's just put it all on there, right? We don't want to do that. It is our job to figure out what's signal and what's noise for investors. And sometimes this takes a couple of meetings and a couple of bad outcomes and some rejection. We got to learn from that and figure out what are they reacting to? What are they not? And we got to trim away as much of the unnecessary stuff as possible, because the more we give people, the more it's open for scrutiny, right? Every data point we give them can work in our favor, but can just as easily go the other way, right? You and I have both seen this firsthand.
Many a time. And I always say, Ryan, if you can't stand behind your summary sentence right at the top, then you have the wrong summary sentence, right?
Yeah.
Everything else is just icing on the cake.
Yep.
So keep it brief for sure. The solution, so they've got patented technology and they fuse flash freezing and freeze drying, replaces outdated hang drying, saving operators 5 to 10 million annually, while creating cannabis product that is fresher, smoother, safer, twice the volume, and commands 1.5 times 2x the price point. And you've got the benefits as far as bullets below.
I like it. A couple things I'd clean up with the copy. Again, it feels like I could probably say this in 2/3 the words, maybe even half.
Right.
And then there's a couple of things here that make me question. Sometimes getting people to ask questions is a good thing, but in this case, saving operators 5 to 10 million annually, is that all the operators? I'm assuming, but I don't. Anytime I go, I'm assuming. I know we need to clean up copy.
Yes.
I'm assuming they mean on a per operator basis. But here's the thing: I know that there are operators that are doing less than that in total volume per year, so it can't be all operators. So presumably, this is going to be some portion of their SOM, maybe. Maybe they're going to target, because if we go back to slide one, you jump back one, there are 15,300, right? That still rely on traditional hang drying. I don't know, how many total there are, but probably most of them, right? 15,300. We jump forward again to this one. There's some dissonance here for me, right? So if we go to the solution, not all of those folks are going to be of the right size to save $5 to $10 million annually, right? There are small producers who are doing $2 to $3 million gross production value, right? So how does this number stack up? So how can I save more money than I'm making? I can't.
Right.
So clearly this points to a smaller portion of the market. Well, not clearly. I'm assuming it does. This is exactly the kind of stuff that starts happening in investors' mind. They stop paying attention to what you're saying, or they stop reading and they go, how could that be? We want to avoid this, right? So let's be very clear here. If this is, operators of a certain size, let's say that. If we're going to go after a particular portion of that 15,300, let's either say that in the previous slide. I know we'll get to it. We'll probably get to it in market size, but at that point, it's out of order. And now I have to go back and correct my thinking.
I love what you're doing there, Ryan. And this is a great demonstration for all our other founders out there. In fact, Will and I, we just missed that point completely. And this is a great demonstration of how, Ryan, different investors will pick up on different things.
Totally different things.
And when I give this feedback to founders, I'll bring something up. I have some founders, they just argue with me. They just say, that's not the case, et cetera. And it's like they take for granted you as a founder, you are not over their shoulder, whispering in their ear and saying, no, this is what I meant. This is the clarification. You always say, Ryan, the burden is on the sender.
That's it. It's exactly it. We have to, any concept we want to float, we got to put handles on so it's easy to grasp. That is our job, right? It's our responsibility at your own risk. You don't have to, but if you want investors to understand it, you might want to. If you don't want to have them asking the wrong kinds of questions and having to clarify things that are just easily changed with, subtle wording change there, changes everything for me, right? And again, as you said, different people are going to see that differently. I am very much a numbers guy. I am very much a story continuity guy. So anytime the numbers are one of those places where it's often really easy to see where the story doesn't hang together. And that's what I'm looking for as an investor. I want to understand how well you understand this, right? And if you don't understand it well enough to put it together in a way that I clearly see it, it starts to call into question other things. Now, I'm not making a value judgment on this deck at all at this point, and this may have gone right by most people, but it jumped out at me. Right. So this is what we want to look for.
And that's great feedback. And it's why everyone, you need to be practicing your pitch decks with multiple people, because the more you look at your pitch deck by yourself in the echo chamber of your mind with tunnel vision, padded with all your cognitive biases, the better your pitch deck's going to look. And the more surprised you're going to be about the feedback. I want to show you this, Ryan, super quick, and pull up some key terms that I'd like to get your opinion on once we get to the go-to-market slide. And that are these terms here: smoother, safer, twice the volume, and commands 1.5 to 2x the price point. And obviously, this is from a consumer's perspective. It's always great. The investor can say, yeah, consumers are going to like this, but here's the thing. I'm not in the target market here. I don't know what those words mean. And I want to talk about just shortly how we help this founder communicate that into the marketplace and get traction on sales, because that's going to help with the investors. Always be thinking traction. Let's look at the market size here. So 15,300 operators US using outdated dry methods. We're focused on the 5 mid to large scale cultivators, and you are right, Ryan, in terms of looking at a different market that would save $5 to $10 million, with the highest overhead, labor costs, and regulatory exposure, representing a $3 billion market opportunity. Here, Will and I, we just spoke very candidly about the fact that this is your entire cannabis market. So that's a top down. All this, we were generally confused with what was going on here, but wanted to
Yeah, yeah.
focus on here. And this is important for a go-to-market strategy. Ryan, I'm interpreting from this, they are going to specifically target, in other words, their ICP are the 5% of large scale cultivators with the highest overhead. These are the pain points, labor costs, and regulatory exposure. Am I getting this right?
Yeah, I think so. So a couple of things here. Why are they making me do math? We got 15,300 operators in the US. 5% of them now. Look, I'm pretty good at math. Was like 765
Yeah,
ish.
right.
All right. Why are you making us do that? Give us a real number there. Don't tell me
Yes.
you're going after 5% of them. You use 15,300 over there. Tell me we're focused on 700. It's nice. It's concrete. Then we can start to talk about how long it'll take to reach. We're going to reach 5 a week. Well, how long will it take you to reach 5% at 5 a week? Wait, I can't calculate that, right? So give me the number that I actually need, right? Of the 15,000, or throw it in parentheses, throw something up there. But to me, the more concrete we can be with this stuff, the more real we can make it for people, the easier it is for them to say yes to agree with and move on, right? At a bare minimum right now, I had to do the math. I got to go, okay, how many targets is that? Because I want to know, right? If they were like, we're only focusing on the top 1% of the market, I'm like, okay, that's 153 people. Is that enough to build a business around just from early adopters, right?
Yes.
You start to wonder, right? These are the questions you ask. And the answer might be yes, 153 would be absolutely enough. 765 might be absolutely enough. Make these things real for people. There's no reason to obscure a hard number that I can then lean into and start to picture, right? I can't visualize 5% of anything. I can, but it doesn't do me any good, right? I just see a progress bar with very little progress on it. I want to see 765 businesses. I can imagine that. I can think about how long it would take you to contact them. I can start to apply that when we get into your go-to-market slides and we start to think about marketing and traction. When you start to tell me how many people you've already worked with, I start to compare that to how much more market there is to reach. All of those things are great and they're easy if you give me the numbers.
For everyone here, and since Ryan went down here already, it's easy, everyone, to calculate your TAM, SAM, SOM. So really what would happen is your TAM should be a calculation of 15,300 times whatever price that you're charging them equals your TAM. Instead of, that's a bottom up. And then your SAM, which I don't mind, and you're right? It's 765. We're going to target the 765 that need this the most. Or you can say, hey, 765 is the segment. Why we're targeting them times the amount. That's your SAM. And then SOM is realistically what we can do. A lot of resources out there online. And it's one of these confounding things that founders often mess up. But what's important, Ryan, and correct me if I'm wrong, when you're looking at a go-to-market strategy, here's what we're going to look at. We're going to look at problem, solution, and then you need to know your market, right? And that way, you've got the basics of a go-to-market strategy. Now, what else in a pitch deck contributes to a go-to-market strategy? Because I want to give founders the mentality of, hey, these are the pieces, because I find a lot of founders completely divorce their go-to-market strategy from the rest of their pitch deck and really the rest of the business. They think, oh, this is just how I'm going to get customers.
They paste a 4 bullet point marketing plan. That's what they paste. That's not go-to-market, right? And that's not the strategy around it. Everything feeds into the go-to-market strategy to some degree, right? All the slides need to be relevant and related to each other. So things from like founder market fit, how much proven demand do we have? Is there a compelling value prop? Is the service model smart enough, right? What are challenges to scaling, right? Because we can talk about going to market, but if we don't have the right resources to actually act on it, we can't do it, right? And you're like, all we need is $50 million to go and do Facebook advertising and we're in, right? Okay, good luck getting that, right? You're not going to be able to go to market like that. That's not how it works. So what's your pipeline look like? What other transitioning struggles are you going to have, right? What behavioral things within the market, competitive forces? Are there missing metrics on any of the slides that I want to be able to see? All of these things feed into the go-to-market slide. The go-to-market slide is super important. I would say for me, and maybe that's, again, numbers guy and marketing guy. So this is like one of my favorite parts of the business as it is. But certainly when I've got my investor hat on, for me, rank order is going to be problem, solution, and market size. Those three are they're hygiene factors, right? Because if I don't care about all three of those, your go-to-market strategy doesn't matter to me.
Right.
If I don't believe in the problem that you're going to solve and I don't think your solution adequately marries up with it, and there isn't a big enough market size to make it worth thinking about, who cares about the rest of it? Just doesn't matter. We talked about this before. And so it's problem, solution, market size, or hygiene factors. From there, it's the traction and then go to market, because traction is what helps me understand how much of your go-to-market is pure conjecture and how much of it is something you already understand and maybe have a reasonable ability to scale to do the go-to-market piece.
How many times, Ryan, have you seen a founder have a great solution? Yes, a painful problem, but an investor says it's a pass because I don't believe you can actually take this to market and get the momentum, the growth that we need for an ROI on our investment?
All the time. Because honestly, how hard is it to spot problems, Ed? They're everywhere. We're humans. We run around creating them for ourselves and others on a constant basis.
It's a good
Finding
point.
solutions to problems, also not that hard.
Right.
Executing and actually making it work and getting the technical solution down and then the distribution it takes to reach the people who need it is the hard part, right? And I would argue that's going to become the more important part as we move more and more into commoditized building. With where we're going with AI now, the idea that we can't build a thing, ludicrous, right? We can build it all. We'll figure out ways to build it all. Distributing it, getting people to buy into it and to buy it.
Right. And these investors, what you just described, Ryan, everything that you've just been talking about, that's exactly what this investor's thinking. Like, you look at Ag Funder, and they're big.
Yeah.
How many founders are hitting them up for investment with great solutions, probably a great team? Therefore, they need to be thinking about, hey, what's the differentiator between all these opportunities? And it's going to be traction, then go to market strategy, all of the above.
That's the calculus, right? Will and I did an entire podcast on, you can't just look at the size of the opportunity. You have to look at the probability. Now, we were talking about that from a founder perspective, but that's absolutely the calculus that investors are doing. They go, how big is the problem? What does it represent from a cash standpoint? Okay, it's big enough. That's a great opportunity to go after. What's the probability? What's the probability that this group with this solution can actually tap into and tackle a significant part of that market? That's what they're looking at 100% of the time.
That brings us to the topic of founder market fit. Right. I'm curious how you would describe it in terms of, does the founder fit the market? Because it's different, everybody, from founder problem fit. You might be the greatest founder to solve that problem. Problem solution fit. You might have actually solved that problem, but investors look for founder market fit. Ryan, what does that look like in their minds?
So I think it's a number of things. And I think that it is probably a close cousin of founder problem fit, right? Because if you're well suited to solve the problem, now it doesn't necessarily mean, like, if you can solve it technically, but let's say they don't believe that you have the personality or pedigree for the market to believe that you can do what you need to do. When we get beyond the technical, and it's like, yeah, but you're gonna have to scale up big teams. You're gonna have to go out and do founder-led sales. You're gonna have to go do all this stuff. Maybe you don't have, right? So they're looking at things. Of course, they're looking at things like, years of experience in the industry. They're looking at what else you've done, what accolades in the space, because just being in a space doesn't mean much, right? I can say I've been a soccer player for now, what, 40 years? Doesn't mean I was ever any good at it, right? I've just been doing it a long time. I was pretty good at it at one point. I think that there's a whole number of things, and I think it will depend on the market too, right? If we look at a market where they're typically like highly visible founders, right? Or if you're looking at this as an investor going, this individual is going to have to go on and continue to raise funds, that takes a particular skill set. And so I'm getting a little out of founder market fit. Sorry. Founder market fit. They're going to say, like, what's required? Is this a market that requires founder-led sales? Does this person have the right personality, skill set? Can we see this person standing up in front of these other portfolio companies that happen to be in their ICP and actually having any success with them? Can we see this founder handling the first PR crisis that comes out of them destroying a batch of product? Can we see this founder, right? So there's all of these other things, like what goes on within a market, right? We look at any given market and we say, what are the dynamic forces within this market? And how capable is this founder going to be, or how well does this founder align with the requirements for dealing with those dynamic forces?
One of the experiences I've had working with one of the founders here at Startups.com, she was a great founder, great team, great product, got in front of VCs. And one of the first things they did after they understood, and they were like, okay, she's a serious player, they set up meetings with her, with potential customers in their network, and said, go sell them and let's see what happens. We want to see their feedback. That is literally their test. Yeah. Can you sell it? And she couldn't close, and the deal went south.
Yeah, of course. And this is them, putting some proof behind it, right? This is exactly why traction is so important, as I was saying before. So when I look at your go-to-market, if I don't see anything in your traction that says or demonstrates an ability to do the stuff on the go-to-market slide, then it's all speculation. Then I have to decide, how much do I believe you can do this?
Right. And that's a bigger risk.
I don't want to have to guess whether you can do this. If you can show me that you can do it, we're both way better off.
Yes, you're bang on. Let's look at how it works. So straightforward. Will had a lot of great suggestions for this slide, just to simplify it. But it's pretty much patented technology. Instead of hang drying, you're going to flash freeze it. And this fancy word, lyophilization, I think that's how I said, high-tech freeze dry method. And that's how this works. And then their business model, they're just going to charge, I think, a monthly rate. I want to be clear on that in terms of equipment training plus 10% on all royalty fed through the system, which is great. So, which brings us to the almighty go-to-market strategy. All right, let's step back just for a moment because I see founders in the audience that are new and they're joining us. Ryan, what is a go-to-market strategy slide on a pitch deck?
It is not your marketing plan, right? It is literally the description of how we're going to take this product and put it into the market. Now that might sound like a marketing strategy. It's not, right? This isn't, we're going to use Facebook and we're going to do this. We're going to do, right? It should have some very specific metrics around which parts of the market we're trying to reach. It should have some very specific description around what we've already done. Again, like this is where, like, if you've got stuff in traction, talk about why we're choosing these things, right? One of the things we'll see is like, we're going to do Facebook and this without any description of why, right? This needs to provide me not only an understanding of what you think you're going to do, how you're going to do it, but also why, right? And that's a really important one to me, because one of the things that will absolutely rule out a startup for me as an investment is when I can see that they don't understand. Like they pick a channel and I can look at it and go, that's not the right move for them. Or if they don't tell me why, I understand they don't know why they picked that channel. They're just like, well, that's what all the competitors do, so we're going to go there too. That's a really strong indication for me that will have me back out, right? I will put the pen away at that point because I need to see that they understand. So this is as much of an illustration around your thought process and how you believe, and a way to connect back to any traction that you've already accumulated. And we can get pretty liberal with that, right? It doesn't always have to be like, we've already run 10,000 successful conversions on Facebook, so we're going to run way more. It could be, we're seeing lots and lots of conversations around our competitors and people's dissatisfaction with them on Facebook, so we're going to attack that first. That's part of go-to-market, right? This is telling me, here's how we're going to catch our toehold. This doesn't need to show me how you're going to spend your next 5 years spending my money on your marketing. That's not what this is.
Right. Let's then look at this slide. Ryan, I want you to put on your investor hat with expertise in marketing, go-to-market strategy. I want you to talk us through verbally how you process this slide. Ready?
We're going places. It's a map. So we throw a little, oh, by the way, did we skip over a traction slide?
Here's the challenge, and I'm glad we're talking about this here and you're bringing up. This was in a previous product, and that was the dissonance that me and Will experienced, in that you're selling a freeze-drying technology process now, but you're showing us traction from the Space Suite product, which you sold $3 million. We don't know if it used the proprietary process that they had, or this was just a previous business iteration, but there was a note here. Recently, we transitioned to a licensing-first model to expand market penetration beyond Washington State. So we were confused of this slide.
Okay. Yeah, that is confusing. So that definitely needs to be clarified. And we've got big number up there. Okay. So, but this is, so we got to clarify this. This has to be clarified. So we need to fix this traction slide. If this traction does align, and I see some of it here. So if they've just recently transitioned to the licensing first model, I do see 80K in new licensing revenue.
Yes.
That's good.
Right.
That tells me that you've convinced people to do this, right? It tells me that, and I'd like to know how we did that, right? We did 80K in new licensing revenue. We got 3 new licensees onboarding. We've got active proof of concept. Like, is that part of the same thing? Is this all describing, like, is that the 80K in licensing revenue? Because 80K in licensing revenue from the world's largest producer in the world is a big deal. Or are we doing a free proof of concept? What are we doing? So this just needs to be, but if it lands the way I think it will, then I would absolutely have this before the go-to-market. Here's why. Jump back to the go-to-market. Okay, well, there's a lot I would change about this slide. But because this tells me we secure licenses through existing relationships, ROI back pilot. Okay, but it doesn't really tell me how,
Yes.
or where we're going to go to find them, or how many of them there are. I love that we just go pick up stuff, dry it, and bring it back to them. All right. That's amazing. Like, I love a sample process. Like, let me tell you about my product. Let me show you. Let me do some of this for you. That's fantastic. I love that that's the approach. But tell me how you're going to reach these people. This without traction is speculation.
Right.
This following the track. So at a minimum, I'm going to have to go back and go after I see, because I'm going to look at this and I'm going to be skeptical, right? We're investors. We're always skeptical. We got the investor hat on. You're always being skeptical. That's what you do. That's what we're here for. We're here to be skeptical and to try to beat it up and understand, does this make sense for us? At a minimum, the way the deck is structured now, I would have to go from the go-to-market strategy. Then there's a whole bunch of slides in between here and traction. If I was correct when I saw you skipping through there, not a whole bunch, but there's a few at least, right? So I'm going to absorb a bunch of other information. Then I'm going to get the good news at the end that, they actually already know how to do some of this stuff. It's not apparent at first. Like, I just now saw for the first time current licensee map. I thought maybe those were like the target states we were going to start in. I didn't understand what that was. So we have current licensees. So is this traction or is this go to market? How does the current licensee map relate to what we're going to do next? Are we going to try to blanket more states? Are we going to increase concentration of clients within states? These are all the things that I want to understand in your go-to-market strategy. I'm not seeing any of that right now. This is super, super vague. And I don't think they have to be. I think they've got plenty to talk about here. So I'm not sure why they're not.
Let's step back because, Ryan, you brought up a whole bunch of really fantastic principles here that I think that we can pull on. So for people watching this, as Ryan talked about, a go-to-market strategy is not just a laundry list of this is what we plan to test, experiment. Ryan brought up a really great point of traction. Now, to be fair, a lot of founders, I know all of you out there, you're saying, but it's a chicken and egg. I need the investment to get traction, and you're saying I need traction to get investment. And it's just not the case in terms of explaining that you are the right founders, you've been thoughtful about it, and you've done, let's say, founder-led sales, and you show some history. Therefore, Ryan, I always like to recommend, curious what you think, if you do have traction in some form, start off with that in your go-to-market strategy based on the $80,000 that we've made across whatever, we got 6 licensees. We got them through this channel. And here's how we're going to continue to do that. That'd be a way to marry and solve for what you're talking about.
And show me that you know what you're doing. You use the traction slide as the on-ramp of belief for go-to-market. You know what I'm going to say about the fact, like, so if we don't have traction, do we put the traction slide at the end? I don't care where you put it because you're going to move it the second you have traction. What I'm going to tell you is if you don't have traction, don't put your traction slide at the back. Don't worry about the traction slide. Go get some traction. Right. I mean, like, I can't tell you how many startups I've seen raised in the last 3 years without pretty significant traction. It's tough, right? It's a hard market. People aren't buying ideas. Why? Because that's the easy part.
Yes, it is totally. So then how would you, knowing what you know? Okay, let's pull up some facts here just to give this founder some guidance. So we know we've got 80K in sales. 7. Man, what am I doing today? We're in bizarro land here. Okay, 7 states. Yeah.
But
states.
We actually don't know how many licensees we have. We just know that's how many states they're in.
That's actually very true.
Right. So this leaves, I was trying to see like, so there's some missing detail here, right? Like knowing how much of the US you've blanketed, if like that's just one each, I would also kind of wonder, like, was there a reason why, right? Presumably there is. They might be saying we're trying to get a good representative in each market because these markets, because the cannabis market is fairly fragmented, right? And so there isn't like a national follow the leader kind of thing. So cool. So we want somebody represented in the California market, so then we can begin to use them as the case study for the other Californians because regulations are different, because everything is different, state by state by state. Maybe I'm guessing a little bit here. I'm not super up on exactly what's going on in the cannabis markets now. But if that's the case, then let's talk about that.
Right.
Is there anything strategic about these 7 states?
Exactly.
Or were these just opportunistic? Did we pick these? Like, did we start in California and then start going east? What happened here, right? Did we decide we want New York so we can be bi-coastal? What's happening here, right? We don't have any idea. And that might not be the most important part of the story. If it's not, get the map out of here. We don't need it.
I'm picking up on what you said here because I actually didn't pick this up. Once again, this is the reason it helps to run all this by an expert. But you love this in terms of this is how we could get customers. It's just let's show them how it works. Give us some flowers, we'll do it for you. But then what I see here, Ryan, curious opinion, like how do you do this? Let's say they're located in California. I believe they are. You're not going to do that over here. So if you actually explain that we're going to use this and we're going to start here because we're located here and then fan out, and these are already the states that we're in, and our plan is to actually set up a center in each one and fan out for low-lying fruit in the state and then go out there, that would be the semblance of a strategy based on what they've already done.
Doesn't that make operations a lot harder? Wouldn't it be easier to just work outward concentric circles from a given geography?
Exactly.
Right. So this is what we have to be careful of, right? We present information and we go like, okay, this looks a little haphazard. And the founder may have a reason why it's absolutely not haphazard, but it's not represented here, right? I can only see what I can see. What I can see here. And again, like I loved this part because there's an implication here too, which is that it has proven a highly effective strategy. So it means they've done this, right? So I want to know more about that. What was the conversion rate? How many did you have to call before you got somebody that said, yeah, we'll give you a pound of our stuff or whatever the quantity is?
Oh, good point.
And then
Yep.
once they did, how many did you have to call, right? How many did you have to call to get them to say yes? Of the ones that said yes and you took back fresh frozen product, how many of them have picked up license agreements? How many of those are the 3 that are in the pipeline right now? How much of that is the 80K in revenue? I want to know these things because this is go to market, right? This is the story. This is what will give investors confidence and go, oh man, right? You called 2 or 3. Okay, cool. How did you identify those? Those were all from my personal network. Oh, okay. Red flag. Oh, not really. I actually am well connected with all 765 of these. I work because I've been in the industry 10 years. I've done work with all of them. No worries there. I will be able to pick up the phone and talk to every one of those. Awesome. Right. But this is the missing detail right now. And you got to pick. Like, we can't put all this on there. We've gone through probably 4 different conceptual frameworks we could use for that slide.
Right.
You got to pick the one that tells the story the best. But the one that will tell the story the best, in my opinion, is going to be the one that's most based on how you're going to take existing traction and multiply it. Because then it's not speculation. It's just fact.
That's the benefit of this startup already having traction. You're saying
Yep.
if you've already done 7 states, you've got representation there, 80K in sales. You also have the background history of doing what, $3-4 million in sales. So at least you understand the industry, what it's like to be at that level. You're saying, hey, there's data there. Let's tell the story to the investors so you don't leave any gaps in terms of them believing that you can actually multiply your current traction.
Yeah. When I can say, because we did this, we're now going to do that.
Right.
It's so much different than I want to do this. Totally different story. It just hits completely different, right? Because we were able to get a 50% take rate on our pickup process return and a 50% conversion on the people who said yes to that, to actually licensing our product. This is our go to market. And we're going to work these states first because they're closest to the ones we're already operating in, or we already have facilities there, or we already have whatever it is. And then it tells a beautiful story. Then I can understand, not only I can start to multiply it out, I can see it, I can trust it, I can believe it. And that's super important.
I'd like to run this exercise by you. These are all really great points, and I know the founder's going to appreciate this. Great founders, by the way, totally coachable, receptive, lots of fun
Love it.
to
Makes
interact
it
with.
so much better.
Yeah. Ryan, if I locked you in a room and I put this information in front of you and you had nothing else, you couldn't talk to the founders, anything like that. You had this pitch deck. What are some ideas that you would walk out of the room with in terms of how do we spike these sales? How do we get more traction for this founder? Something they need to think of, because most likely what's going to occur is they're going to be reaching out to investors. It's going to be taking some time. In the meantime, work on your traction. Don't just wait around. Investors don't like that. What would you be telling this founder after you left the room and saying, I thought about it. Here's what I'd be doing. How would you advise them?
I would be digging into, how do we get that first 80K?
Yeah.
And what's stopping us from lining up more conversations, more commitments, maybe putting it on a fake scarcity schedule, saying, hey, we're coming to your state in 4 months. Can I get commitment for X pounds of product to go and do our test run, right? This thing they're doing where they're doing pick up, freeze, and return. Pick up, cure, and drop off. Sorry, that's what they call it, right? So pick up, cure, and drop off model. Can I get a bunch of people to commit to that? Even if, let's just say for some reason, they resource constraints being what they are, they don't have the money, the equipment, whatever, to do that for a lot of people. And we get a lot of people to commit to it. So you can show me, hey, by the way, not only is this our go-to-market, it's already lined up. Here's the roadmap. Here are the number of people that are waiting for us in August, September, October, November, tied to the growing seasons in each of those states, just so we look really smart.
Let me put this principle out for founders. Genius leaves clues, make common sense, common practice, whatever colloquialism you want to throw out there. But what Ryan said is go figure out what made you successful and see if you can double down on that and repeat it. Another thing, let's riff back and forth. Maybe we'll have some more ideas, but we go back to smoother, safer, twice the volume, commands 1.5 times 2x price. If you've already done $80,000 in this and you're in these states, I'd also be getting testimonials, social proof on how much better these businesses that are licensing this technology are doing. I'd get testimonials and I'd show proof, because if I made this bold claim that we can charge twice the price, like I've seen the movies, Ryan, where people go, oh, that's good weed. And the dealer's like, oh, this flies totally off the shelf over here. I'd want proof in that, because if I can show that investor that, as an investor, I would be impressed.
Yeah, 100%. I'm assuming that doesn't exist yet, because if it did, it should have been on the traction slide, right? Like that's amazing stats, right? So how much sales lift are we creating for people? Because that's not only useful to help the investors see the value, that's super useful for going to the next one and the next one and the next one in terms of the picking up licensees, right? If you can show them, like, not only can we create this 84% cost savings and do it in 24 hours versus 2 to 3 weeks, we can also increase your dollars per pound by X, right? Really compelling. right? Now, maybe they can't do it with all of it because maybe there's only so much premium buyer market, right? We can't do this with all of our stuff. We can't always increase the price, but premium offering, really interesting. This is something I talk about a lot in general marketing, which is when people are at that early stage and they're still doing like validation, one of the things they forget to show the validation of is the value that was created. They're like, how validated is it? And they'll be like, we have our CAC, we have this, we have that. And I'm like, okay, it's early stage, so you can't tell me what your LTV is, but are you checking with people to find out if they do what you wanted them to do, they pay you for a thing, do they get the value? Right? What are the outcomes for your user? And that would be super powerful in this case, because that's what's going to speak to, repeat purchase and things like that. Now, maybe the 84% cost savings is enough, right? That might be enough. That might be compelling enough. They might go like, kind of doesn't matter if we can sell it for more. We're still going to make more money because we've reduced our cost of curing by 84%. And that was a significant line item. I actually don't know how those figures break out. I don't know how much of a cost center this is for them, but presumably if they're having to tie up physical space and other stuff to do this, it's not insignificant.
I met a founder who actually, it was the investor who introduced me to the founder. And she said this founder's pitch deck was amazing because it was literally problem, solution, market, business model, how it works, just the basics. Here's our team. And then it was a slide of company logos, names, and phone numbers. And they said, literally, everybody's agreed. Just call them and ask them everything you want to know. They're agreed to it. And they said, wow, that is so impressive that they ended up making the investment.
Yeah. No, it's a solid move. Yeah. Look, I think there's all kinds of things that you can deduce this, and imagine the value of that, right? So because you don't need 100 phone numbers, nobody's going to call 100 people. You throw 5 or 6 on there, you're in great
out of
shape,
out of the 100, and you say you've had all those conversations. But Ryan, here's a scenario. This is the last question I want to challenge you with. It's not a challenge. It's actually a challenge for the founders. Founders say, and this is what I worry about, they say, we're going to go to the ask slide, right? Raising 1 million to scale to 10 states over 12 months. And they say, here's the sales, marketing, all that jazz that we typically put in there. And it's that chicken and egg. Founders tell me, Ryan, and it's kind of like investors want us to create a chicken without an egg and an egg without a chicken. My answer is yes and yes. Yeah. That's literally what investors are looking for you to be that exceptional. What would you say to this startup if they told you, we're waiting for your money to go and do our marketing plan, our sales plan? We can't grow unless we have your money.
What would I tell them? I hope you look good in a beard because you're going to be sitting around waiting for a long time, right?
Father Time catches up to us all.
Yeah. So I wouldn't, it's certainly not a question, or it's not something I would pose to an investor, because my answer to that as an investor would be, right, if you're not willing to find ways to move forward without my money, I'm going to be seriously concerned about how motivated you'll be with my money.
Very good point.
So look, but I think there are plenty of things you can do. This is where you got to get a little clever. You might not look at like, what's going to be our most efficient growth channel going forward. We're going to do this thing when it needs this much money. All right, then look at what's the cheapest one we can do. Like, we can always pick up a phone, right? And look, there are 765. There aren't 765,000 of them.
Mm-hmm. Yep.
Right? I can call 765 people in a month.
Right.
I can talk. I can have at least attempted outreach to each and every one of those folks. Right. That alone is traction. That alone is traction. If you show that to investors, if you're struggling to find the things, like, show them that you are doing the things that will plant the seeds, that show the effort, that should start to produce some results at some point. Now, if you've made 765 calls and gotten 765 no's, not going to make a very strong case for raising funds. Also, you might not want to raise funds at that point, because you might want to figure out why everybody's saying no before you take out the people's money and build a business that nobody wants, right? And I'm not saying that's the case here. I'm just saying that, like, don't fail to interpret some of this signal, right? And you say, well, like, it's impossible to get them to say yes without the money. What about having the money is going to make you any different, right? Now, if you come back and say, look, we can do far more pickup, cure, and drop off. Awesome. You can do more. Can you do none right now? Is that the answer? Well, then ask me for enough money to go prove that when I call somebody and do pickup, cure, and drop off, that we get a reasonable number of those folks. If it costs you a couple $1,000 a piece, ask me for 15 and let's go do 5 of these suckers and let's see what happens.
That's a really great point, Ryan. In fact, as an angel investor, I have specifically invested in an experiment over the entire business plan.
As an angel investor, you are always investing in an experiment. The whole damn thing is an experiment at that point.
Good point. Right? But it doesn't stop you from bringing things down first, as pointing this out to everyone who's listening. There are always things you can do without the money that show the investors what could happen if they did give you the money. First thing. Second thing is, you don't need to necessarily raise that $1 million. Someone believes in you and say, listen, just take the risk with me. I promise we'll give you a pro rata rights. You can follow on. If this experiment works, give the 15K, and then it'll take your 85K after that to get
Yep.
you to 100K and give you a sweetheart of a deal for believing in us. That's a very possible strategy.
It is. It is. Like, I think that founders get confused by this and they're like, but don't we need to go raise all the money to do all the things? No, no, especially if there's a little bit of a roadblock, get some money to fix the roadblock, right? You don't have to build the rest of the road. You gotta bridge the current gap, whatever that is. And so if you don't have enough traction, think about how do we raise just enough money, or how do we take a tiny slice out of this? How do we talk to investors and say, look, we'd love for you to fund the whole thing, but right now we've got some questions about traction too. So we are going to do this. We need $25,000 so we can go pick up 5 more clients by doing exactly this thing that we've already done, but don't have the funds to do right now. Like, I would entertain the hell out of that.
I love it. Ryan, this has been great. Between you and Will, you two are the 1-2 punch that I think all the founders are going to need, including our platform with all the investors that we've sourced for this startup. There's 1,184 that our system has identified. Going to leave the last word to you in a minute. What's your final encouragement for these founders?
Find your traction, right? Figure out what that looks like, because everything else is going to become a lot easier when you can show me, not tell me what you're going to do next. So get as scrappy as you need to and go find your traction. Right? Think about what is the way that we can show. Now, again, if we can't show all the way to the promised land, if I can't do the pick up, cure, drop off, and convert, find the limited version of that. Get people to commit to that thing so that you can show me, you know how to get people to say yes to what it is you want to do. That will go a long way. So just work as hard as you can to develop as much traction as you can with the resources you currently have, and think from start to finish the story you want to be able to tell investors, because it's what you know will compel them to get involved.
That's great. Couldn't have said it better myself. Well, you always say it better than me, so why do I even try?
Probably
Ryan,
not true.
I appreciate your time. I know these founders appreciate time. Everybody else, while you're here, do the YouTube thing. Like, comment, subscribe. You're watching this on the social. Share what you've learned. Come try our free product in terms of investor matching. This has been great, Ryan. Ryan, we're going to keep doing this with company after company till we get everybody funded. This has been great.
Can I throw a fun little thing right here at the end?
One more, yeah.
In the amount of time we have been on this. So if you're thinking about raising funds and you're wondering whether you should go use the tool, go use the tool. While we were on this call, Ed, 4 more people started using it. That's 4 more people who are going to be reaching out to investors that you might want to have talked to. So don't wait. Get started. If you're raising funds, start opening the door, start working towards those investor conversations, work on your traction, but get that pipeline of investors lined up.